Economist Judy Shelton joins me now. She's been an observer and almost was on the inside of the Fed. She might have been the next Fed chair at one point. Judy, the Taj Mahal on the Mall, that $3 billion thing that has been created by the Fed. Again, nothing criminal. Again, the criminal suggestions have been pulled away for the moment. But it was kind of emblematic of how the Fed has grown far too big for its own britches from what the Fed was expected to do when it started, right? And Kevin Warsh wants to downsize the Fed. How would he go about doing that?
Well, I love the fact that Kevin Warsh does have that mindset. Yeah. He gave a speech last year where he said he does not believe in empowering government agency to solve the world's problems. And he thinks that in order to be trusted, an economic institution has to be trustworthy, and to be trustworthy, it has to be competent. So that goes to your point. The cost overrun is just ridiculous, and I think that Chair Powell showed that he really isn't the leader we need at the Fed. We need new models, new mechanisms, but especially new management. That's what Kevin Warsh will deliver.
But he's against a corporate culture that's been in power there for years, if not decades. He's going to need a strong backbone to carry through this, right?
Well, that's true, because actually the economists who work at Fed headquarters are 10-to-1 registered Democrats. And I think that the Fed staff has largely choreographed the Federal Open Market Committee policy determining meetings. And so what we need is a firm hand that doesn't let itself be led around by the nose. And what Kevin Warsh wants to do is reduce the Fed's footprint. And I'm all for that. And it means shrinking its portfolio. The slight problem in that is that's really quantitative tightening, which normally would raise interest rates. Yeah. But that may be the very way that Kevin Warsh can justify reducing the primary mechanism, which is paying interest on cash reserve balances. He could move that target interest rate down and justify it by countering it through the sale of Fed assets.
Okay, and I want to try to take as much jargon out of this as possible, but the bottom line is we got a $6.7 trillion portfolio that the Fed has that Kevin wants to shrink. He doesn't think that they should have a portfolio, primarily bonds, of $6.7 trillion. So in order to get rid of them, he has to sell them on the market. And when you sell more stuff on the market, you have to raise the interest rates in order to convince people to buy them. Isn't that what we're talking about?
Right. It's the opposite of QE, of quantitative easing, which is when the Fed tries to drive interest rates down to near zero after 2008 with these large purchases of government assets. And that means Treasury securities and mortgage-backed securities. So that is why the Fed accumulated so much, at one time over $9 trillion, which means that the Fed is dominating credit markets and even allocating credit. So the goal is to minimize that and not make the Fed so prominent in financial markets.
Well, let's go from Wall Street to Main Street, because there's a new poll out showing that 61% of Americans feel the economy is on the wrong track. That's up from 43% in January. Can these numbers be turned around before the midterm elections in 6 months?
I think so. We're going to get the ultimate benefit with the resolution of the war with Iran, because we will have eliminated a nuclear threat. But I also think that we'll be in a better position in terms of our own capabilities in energy production. We will be sitting pretty. Our economy is already doing much better than other countries. I think people have felt negative because they haven't gotten back their tax refunds yet. They should be enjoying the benefits of lower taxes and less regulation and more savvy trade policy, and especially the energy production. But right now there's pressure on gas prices. And because under Chair Powell, since February of 2018, we've had over 31% cumulative inflation. And people feel that they just can't keep up. And they wonder if their wages are bringing them ahead by those large amounts. And when you see pressure on on food and housing prices, along with gas, you just start to feel discouraged. And then throw in that the government comes across as being inept and corrupt and not capable of going after all the fraud. People just feel like the economy's on the wrong track, but I do think we can turn it around.
And you do have the stimulus from the tax package that was passed from the one big beautiful bill. You have tremendous incentives for growth. You have tremendous incentives for capital expenditures, and companies are doing that. They're building whole new factories, which are you can depreciate 100% of those expenses, depending on how your tax situation works, because of the big beautiful bill. So that's one reason I think that you don't see any rise in job insecurity. In fact, the last jobs number we had for March, during the whole month that we had the war with Iran, was much better than was expected.
Well, right. I mean, the Trump economic agenda is pro-growth, and it's working. We see a big gain in manufacturing. This is definitely to the benefit of Main Street, and that's what we want. People, though, who haven't had financial assets, so we're talking about half the population, are very cognizant that there's this increasing dual track toward economic prosperity. So it's really important that people get a piece of the pie, that they start to see increases in their wages. But I think the emphasis on manufacturing is going to bring that about.
The great Judy Shelton. Judy, great to see you. Thank you so much for being here. Really appreciate it.
My pleasure.